Usually when IPOs happen in strong markets like this, it reminds me a lot of the late 90s. And I was trading a lot then. I was at Goldman as well then. And what you found is after the IPO, it would launch and it would be choppy as hell for a while. Sometimes it would sell off quite sharply. Facebook sold off really sharply as people took profits, repositioned. Now, don't forget, a lot of people have front run this ETF. So they were going to want to unwind. And many of those are going to switch to ETH that I've talked about before. They think, rightly so, that ETH is the most likely candidate for the next ETF. And if Bitcoin went up 100% because of this ETF, ETH will go up 300% because it's less liquid, put the same amount of money in.
Following the historic approval and listing of 10 Bitcoin ETFs, there is a lot of excitement in the cryptocurrency market. But now that there's widespread conjecture that a spot Ethereum ETF may be imminent, the excitement has spread throughout the Ethereum community. But before followers start celebrating, prudence is suggested. The Securities and Exchange Commission, SEC Chief Gary Gensler, is quick to put an end to any overzealous excitement. When asked whether a spot Ethereum ETF will be approved by the SEC soon, Gensler gave little optimism in a recent CNBC interview. Gensler has maintained that the only cryptocurrency that he considers a commodity is Bitcoin, which puts it beyond the purview of SEC regulation. The SEC has previously indicated that it has broad authority over all Ethereum transactions, even in the absence of official announcements about Ethereum's security status. Raoul Pal explores and analyzes the events that followed the recent approval of an ETF in this video. In addition, he discusses the possibility of an Ethereum ETF and even dares to say that it may do better than the Bitcoin equivalent. Come along as we work our way through Raoul Pal's observations on what's happening. As we explore the world of cryptocurrency ETFs, don't forget to press the like button, subscribe, and leave your comments. And let's get started and hear what Raoul Pal is about to say.
I've explained it before how I think of this is in two terms. One is anybody who was an investor in Bitcoin in 2011-12 was like a Series A investor. 2013 cycle, maybe Series B, 2015-16, Series C, the last cycle, Series D, we've just IPO'd it. And usually when IPOs happen in strong markets like this, it reminds me a lot of the late 90s. And I was trading a lot then. I was at Goldman as well then. And what you found is after the IPO, it would launch and it would be choppy as hell for a while. Sometimes it would sell off quite sharply. Facebook sold off really sharply as people took profits, repositioned. Now, don't forget, a lot of people have front run this ETF. So they were going to want to unwind. And many of those are going to switch to ETH that I've talked about before. They think, rightly so, that ETH is the most likely candidate for the next ETF. And if Bitcoin went up 100% because of this ETF, ETH will go up 300% because it's less liquid, put the same amount of money in. Also, there's a lot of people unwinding the GBTC arbitrage, closing that position, selling out, moving into a different ETF. There's a lot of shenanigans going on. And you can see that with the net flows. There was 4.5 billion or whatever of total flows. The net flows are much smaller, 700 million or so. It's still the biggest ever ETF launches in history as the series, but it's all to play for. And I want you to understand how this works is, okay, all of the pre-orders have now been filled. That was all of these ETF providers going to all of their clients, begging them, you need to do this, you need to do this, you need to do this. Everyone's done that. Sure, there'll be some follow-on next week. A lot of the GBTC guys are unwinding, and that will go, some will wait a few days, see if the market is stronger, whatever. So that goes on for a while. You've then taken forward or brought forward a lot of demand. By the end of it, maybe it's 1 billion, maybe it's 2 billion of demand you'll have brought forward. So then who's the buyer? You've got the people who front ran this who want to sell. So you're going to see volatility. And I've always reminded you guys in the do not fuck it up mantra, part of that is expect 35% pullbacks, could be less, but just expect them. And that often happens when you get to this kind of 61.8% Fibonacci level in the first leg of the bull run. It often corrects sharply, people get washed out, leverage is cleared out, and then the real run starts. And the real run is the run to all-time highs and beyond. That usually starts around the halving. So I'm guessing there's maybe a month or two of chop. And chop in crypto markets is like down 30%. It's just sideways chop. So just be careful out there. I could be wrong, could keep sailing higher, but it just feels like it's trading a bit heavy. And even if it does as a spurt higher, I don't think it makes much progress yet.
In light of the approval and listing of Bitcoin ETFs, Raoul Pal offers a strategic viewpoint on the present situation of the cryptocurrency sector. He draws comparisons between the early phases of Bitcoin and an initial public offering, IPO, in the stock market, drawing parallels with conventional market dynamics. Raoul Pal claims that those who made early-stage investments in Bitcoin may now be considered early-stage investors, moving through many investment cycles that are similar to series capital rounds in the startup industry. In his opinion, Bitcoin's IPO is imminent, given the recent approval of Bitcoin ETFs. Based on his experience from the late 1990s, Raoul Pal observes that following an initial public offering, IPO, assets frequently see erratic price fluctuations and occasionally see steep sell-offs as a result of profit-taking and portfolio modifications. He sees a situation similar to this for Bitcoin, with possible sell-offs and portfolio reorganizations. It's interesting to note that Raoul says a lot of investors who could have front-run the Bitcoin ETF would now want to reduce their holdings and switch to Ethereum. He contends that because Ethereum is less liquid than Bitcoin, it may see price increases that are up to 3 times greater. Raoul Pal notes the significant capital flows into cryptocurrency ETFs and stresses the current market dynamics, emphasizing that although there may be big overall flows, net flows are comparatively modest. As investors modify their holdings, particularly those engaged in the GBTC, Grayscale Bitcoin Trust arbitrage, he expects significant swings. In conclusion, Raoul Pal offers a cautious assessment, warning viewers to be aware of possible pullbacks, which he estimates to be between 30 and 35%. He notes that there may be a brief period of unstable or sideways trading in the cryptocurrency markets prior to the probability of a longer-lasting positive trend, which frequently occurs around the time of the Bitcoin halving event. Raoul's observations provide a realistic viewpoint for negotiating the intricacies of the changing cryptocurrency scene.
But really, this is a trade deal between fiat world and crypto land. And it's a trade deal because the capital that's flowing into crypto land is not permanent residency. These are not migrants. If you remember, population growth, GDP growth is population growth plus productivity growth plus debt growth. This is not population growth coming into crypto land. That has to be new wallets and actual self-custody or on crypto exchanges and all of that stuff. This is a trade deal to allow TradFi Land, our RAA in Cincinnati, to get his clients across into this new world that has higher rates of return. The best example of this I can give you is China entering the WTO. That was a classic example of opening up a market that had much higher rates of return and absorbed huge amounts of capital over time. And I think crypto will absorb huge amounts of capital over time. But remember, these people are tourists. This is not even foreign direct investment, FDI. That would be VC money. What this is speculative hot money flows into this new economy. And one day it'll wash out again too. So be careful of that. While we want to encourage them, while it's going to help our ecosystem grow, while it's going to create more capital, more opportunities, it'll move your bag as well. This is not permanent residency in our world. And so, yes, we welcome them with open arms. But remember, what we really want is a new financial system being built. Now, interestingly, you saw Larry Fink talking today on CNBC, I think it was. Not that I watch CNBC, but there was a clip. And he was talking about, well, this is just the start, because what we actually want to do is tokenize the entire financial industry. And he's dead right. That is the migration of, it's one of the surviving coconut girl doing whatever she does at this time, every time is Barb, when I'm on one of these. So as firms like BlackRock, Franklin Templeton, Fidelity, these are currently, you think of these as fiat world companies that have set up offices in crypto land, much like many businesses like Apple set up in China. But what Larry's talking about is the migration, the eventual migration of the financial system into crypto land, which was my core thesis when I first found Bitcoin in 2012, and has remained my thesis of where this is all going, amongst many of the other opportunities. So it's really interesting when you think of it in economic terms. These are economies. This is a digital economy of crypto land that has other states within it, Bitcoin, Ethereum, Solana, whatever it may be. So that becomes very interesting. And you can think of, even within that, you've got, interoperable systems, stuff like whether it's Polkadot or Quant or a whole bunch of these things. allow, or chain link, interoperability. That's the travel, the border crossing from going from one of these nation states to another. We've got immigration, which is us opening wallets. We've got FDI, which is VC. We've got trade deals, which is hot money flows chasing opportunities within a country, which is the ETF. We have a monetary system. We have interest rate systems, which is the yields. We have a collateral system. You can call that Bitcoin. You could even call ETH collateral within the system because it's used within borrowing and lending. We've got asset markets, which is like NFTs. So, and there's a lot more. I've written extensively about this in Global Macro Investor, and also in Real Vision Pro Macro, I've talked about this at depth too. This is a new digital economy, and it's an emerging market, and it's the fastest growing market we've ever seen.
Following the much-awaited introduction of the Bitcoin Exchange Traded Fund, ETF, BlackRock CEO Larry Fink has expressed his endorsement of the concept of an Ethereum ETF. In a CNBC interview, Fink shared his viewpoint and said he thinks owning an Ethereum ETF has benefits. He emphasizes that the industry is moving in this way and sees these ETFs as significant milestones towards the larger trend of tokenization. BlackRock's iShares Bitcoin Trust is one of numerous products that have recently made their market debut in the United States following clearance by the Securities and Exchange Commission, SEC, with the ETFs accounting for almost $1 billion of the $4.6 billion total trading volume. BlackRock, a major player in asset management, could be considering launching a similar product for Ethereum's native token. Fink thinks that the process of tokenization representing assets on the blockchain as tokens has the ability to address problems with corruption and money laundering. He stresses that people see cryptocurrencies, Bitcoin in particular, more as asset classes than as fiat money. Fink compares Bitcoin to gold and believes it to be a hedge against geopolitical threats. Despite the early excitement around the introduction of Bitcoin ETFs, there was a notable decline in the value of cryptocurrencies. The price of Bitcoin fell below $42,000, signifying an almost 10% decrease. This decline came after the market saw a record-breaking spike to $46,000 earlier on Friday and a top of $49,000 on Thursday, the day when US-based Bitcoin ETF trading began. Prominent personality in the Bitcoin industry, Raoul has long maintained the view that Bitcoin is a special kind of asset. He is hopeful that more people are starting to see the bigger picture for the Bitcoin industry. The current decrease in Bitcoin prices, as Raoul implies, may be part of a market correction after the initial enthusiasm about the ETF acceptance. There are concerns over the possible course of Bitcoin's price as the cryptocurrency market negotiates these swings. After the ETF was approved, some experts, such as those at research firm CryptoQuant, had predicted that Bitcoin would drop to as low as $32,000. The topic of conversation right now is whether the rise will continue or if this dip is just transitory, constituting a sell the news scenario. Comment sections are open for viewers to express their opinions and predictions, including whether they think Bitcoin will really fall below $32,000 or if it will rise from its present position. Remember to press the subscribe, like, and turn on notifications for additional updates on this developing story. I'm grateful you watched.